Today, we're diving into what is, without a doubt, one of the most important skills in trading: understanding market trends. Seriously, if you can get this one thing right, you'll find everything else just kinda starts to fall into place. So let's jump right in. So why is this such a big deal? Well, get this. The source material for this explainer suggests that if you can just correctly identify the market trend, you've already mastered a massive 70% of market analysis. That's huge. It's the lion's share of the work, done right at the very beginning. Here's our game plan. First, we'll talk about why trends are just so foundational. Then I'll give you the golden rule, a super simple formula. After that, we're going to break down exactly what uptrends and downtrends look like on a chart. We'll put it into practice, and then we'll wrap up with why this is basically your new trading superpower. Okay, before you even think about placing a trade, your very first job is to figure out one thing. Which way is the market going? Is it going up, down, or is it just chopping sideways? This single piece of information is the bedrock for every single decision that follows. This is the ultimate question, isn't it? Should you be buying or should you be selling? Well, the trend gives you the clearest answer. If the market's in an uptrend, you should be looking for reasons to buy. If it's in a downtrend, you're looking for reasons to sell. It's kind of like swimming in a river. You always want to go with the current, not try to fight against it. So how do we spot that current with any real confidence? The great news is there's a beautifully simple formula, what our source calls the golden rule, that pretty much takes all the guesswork out of the equation. At its core, a market trend is just the general direction the price is headed, but here's the really cool part. This movement isn't random. Price moves in specific, repeatable patterns that once you learn to see them, you'll start seeing them everywhere. And here it is, the golden rule. An uptrend is simply a series of higher highs and higher lows. A downtrend is its mirror image, a series of lower highs and lower lows. I'm telling you, these two simple formulas are the absolute key. Burn them into your brain. Now, to spot those highs and lows, we just need a super quick look at a candlestick. The thick part, the body, shows you where the price opened and closed. But for our purpose today, we're really focused on the wicks, those little thin lines sticking out. They show us the absolute highest high and the lowest low the price reached. That's what we'll be watching. All right, enough theory. Let's see this thing in the real world. We're going to dissect an uptrend right now, and you'll see that higher high, higher low formula just pop right off the chart. You know, every trend has to start somewhere. As you can see right here, the price makes this first big push up from a clear bottom, that's our low, and it forms the first peak, that's our high. This is the first Lego block of our uptrend. Okay, now this is where the magic starts. The price pulls back, it takes a little breather, but notice it doesn't drop all the way back down to where it started. It finds support above that first low, and that right there is what we call a higher low. This is our first major clue that the buyers are stepping in. And there it is, the confirmation. From that higher low, the buyers push the price up again, and this time it blows right past the previous high. This creates our higher high. Now we officially have both parts of our formula locked in. And as long as you keep seeing this beautiful stair-step pattern, a new higher high followed by a new higher low, the uptrend is confirmed and active. Your job is to simply ride that wave.